Hello, ladies and gentlemen. Welcome back to the Crypto Titan channel. I'm here with Chris Zaknun. I hope that's how you say your name properly. And he is the CEO of DAO Maker. And we're going to be talking about what DAO Maker does, and then some questions about DeFi and how the landscape is kind of shaping up. So the first thing that I want to allow you to go into is just kind of how you got to this point, a little bit about your journey, and a little bit about yourself.
Thanks for having me.
Absolutely.
It's a quite interesting question. I think everybody who didn't just start raising money and start doing some organic pathway has a quite interesting story. Even and a lot of the good projects nowadays, like Wi-Fi, and have really interesting people and how they got to that point. So I started off as a Twitter channel called ICO, and that Twitter channel became a Telegram group back in early 18. I think January 18. And people kind of pushed me into Telegram. They said, hey, can we have a Telegram group so we can become a bit more active? Then people said, Chris, can you pool for us? And I said, what is a pool? So a lot of pools popped up, but ICO was probably the second or even the third pool in the world. And we really innovated the pool industry by building a platform, etc. At that point, it was crazy and there was like potential innovation everywhere. And the minds of the people was nothing like now. It was much, much bigger. It was like everybody wanted to like build something, do something. So I just asked a guy who was very active in the chat. And I said, find the 10 most active people and put them into a team chat. Obviously, that didn't work because you can't build a team like that. You can't build a company. But it was a good first experience. So from those 10 people, one of them stayed, which is now our CTO, Gio, co-founder of DAO Maker. And soon after that, we met the second co-founder, which is Hato. And we were essentially building a platform for pooling and tried to create a higher standard for investing. Most pools, they just let people form in. We tried to do research, etc. But in 2018, the market really crashed and we had to find an alternative way to make money or the company wouldn't survive because we never raised money. So we had ongoing expenses, salaries, etc. So we had this really cool platform, which was the idea of other pools was like, if there's too much allocation, too little allocation, too much demand, we just increase the price. We were a bit different. We said, okay, we will let people have allocations who help us grow, which was based on this whole idea of proof of love and proof of care back of 2018. So we built a system around it and really exploded. Like if within 1 month or 2 months of introducing this proof of care, which was the first version of social mining, it was called proof of engagement, we really became huge. And then we said, okay, that's a cool software. Why don't we just continue building it so that we can sell it to other clients? And we had about 3 months to build a white label solution that would be paying off our bills. And we did so, and we found the first client, which was LTO in 2019. And at that point, we said, okay, we should change the name to something more legit than dog. So we thought, okay, we have a cool solution which kind of is built on the idea of a DAO where people self-manage themselves, and the white label software kind of creates these DAOs. We thought, okay, let's call ourselves the guys which make DAOs, like DAO makers. From there on, we continued building these companies, and we not only gave them the software, but we helped them. And LTO was really a big breakthrough because it was complete dead bear market. Bitcoin at 3K, people losing all hope. And LTO couldn't raise anything. We came on as strategic advisors to LTO and helped them. I flew to their offices and we raised funds. The first ICO that raised funds in ages. And it went on to go from 1.8 cent low, I think, all the way to 30 cents out of the deepest bear market. And then the IO crave started kicking off. And we said, okay, we're pretty good at this. And then we kept going. And then Elrond came to us, which is now a huge company. And they said, hey guys, you did a good job with LTO. You think you can do it for us too? And we said, yeah, we probably could. Did it again. And then we said, yeah, that's our thing. Let's make a business out of it. And that's how it happened.
That's awesome. I mean, that's an awesome story. It just sounds like lots of improv, lots of innovation, and just trying to do whatever it took to succeed, especially in, the bear market. It was pretty rough.
Yeah, it was really rough.
Yeah, it wasn't fun. I mean, I was here for it. So I remember, I mean, it was a rough time. I mean, like you said, the IEOs started to get more popular, and it seems like we've now transitioned into another phase. Like you had ICO and IEO, now we're in like something completely different. which is just more like it kind of allows for you guys, for example, to incubate these projects and participate in a more decentralized manner. You don't have to go through like the whole ICO thing. Yeah. You don't have to go through the ICO thing or pay exchanges for all that stuff. It's much easier. And I think it's awesome because now we have actual like liquidity pools and decentralized exchanges, which is great. Okay, so I think you pretty much kind of explained like what led you guys to start DAO Maker. So two of your main products that you offer right now that I was able to see from your guys' website is social mining and the DYCO token model. So first of all, like what is the DYCO? How did you come up with the idea for it? Cool. And then what is like social mining?
So there's three major projects which we offer. It's like consulting, the token sales, which is DYCOs and shows, SHOs, and the software, the white label solution. So the whole idea of the DYCO came to being after we wanted to branch out social mining, which is a software for distributing tokens to the more meritocratic people within your network. And we thought, let's go into the equity market because the equity market kept getting bigger and bigger. Not like big VC funded equities, but crowd funded equities. So we did some research into target audience of these, Seed Invest and other platforms. And we found some agencies which do this, what we do in the ICO space of equity, where we came out to the conclusion that equity crowd funds are the biggest scams there is, because we looked into 300 different projects over 3 platforms. From those 300 projects, only 16 had an exit. So that means all others had a complete 100% loss. And from those 16 exits, there was not a single project which had a higher exit than what the starting point was. So there's not been a single crowdfunded equity project startup that ever made money for the investors. But in the ICO space, if you would have invested into every single ICO ever, no matter what scam, every single scam, you would have been still positive. So
that's crazy.
People take the ICOs and the tokens as very scammy, and the equity is more safe, but it's actually the other way around, because the equity gives the idea of safety, although it doesn't. So we thought we need to introduce a system which can bring safety and security and accountability, right? What equity kind of says is accountability, not really, but kind of. If you have a token sale, you have zero accountability. The people can take the money, they can do whatever they want, you cannot sue them. So we thought, okay, we need to introduce the accountability to the hyper liquidity of token sales, and then we can tap into the equity market, the crowdfunding equity market, which has been growing every year, because we want to innovate the space of introducing VC-like investing for retail investors. Because as long as Silicon Valley keeps getting more and more money, we will have more and more people, which are the inequality of wealth is going to increase over and over. Because we know. So we thought we need to disrupt this whole Silicon Valley idea. Silicon Valley wants to disrupt everything, but we want to disrupt Silicon Valley itself. So we thought, okay, we need to find a system how we can introduce not trading like Robinhood to retail, but VC-like investing, which means we need to bring good startups to the small people. Equity crowdfundings are not bad because equity is bad, but it's because first of all, you start with the best funds, like Y Combinator, like the best incubators. Right. Then you go to VCs, then you go to angel investors, then you go to the funds, then you go to the shitty funds, and then you end up at these equity crowdfunding platforms. So the things which touch retail investors are just a complete crap. In ICOs, not the same, right? Binance is a great company, great example. Multi-billion-dollar company was available to everybody. So there's a bunch of shit, but there's a lot of good stuff too. So it's all put into one pot. So we thought we should find the good ones, and we have to build a framework in which small people can invest. And we've been doing this for about 2-3 years now. And the DYCO is more or less the last step. Because what a DYCO essentially does is it gives accountability to token sales. A DYCO, people look at a DYCO and say, that's just a refundable token sale. But it's not. Because in a DYCO, 100% of the sold supply is circulating and will not increase until the timeline has been done. So let's say a company comes to us and they say, we would like to do a DYCO. And we say, okay, when is your milestones? When do you want to produce your product, etc., product availability? And the first DYCO is Orion. So we said, okay, 12 months, 9 months, 12 months, 16 months. This can change. So after 9 months, people can hold the token, but for the first 9 months, they can look if this is actually good. And after 9 months, they can decide to take their money and put it back to the company. But the tokens that they bought will essentially be burned. So there's a lot of refundable token sales. If I have a refundable token sale and I give you back my money, but you get my token back, well, you didn't actually burn any money. There's no accountability. Because the company only gets 20% and they're essentially 100% of the supply could get burned if they don't do a good job, they will get wrecked if they don't do their job, which means they are accountable for their actions. We have all the hyper liquidity. It is not a security because we are not promising people returns. We're just promising people you're going to lose 20%. We're not going to lose 100%, but you're going to lose 20%. And at the same time, there is accountability because we have a stick and a carrot. So the stick would be, if you don't do your job, your total supply is going to get burned. You don't get your money. And the carrot would be, okay, you have 20% of your money. Let's say we raised $10 million and you have $8 million waiting for you if you do what you said. Which means if the investors make money, then the company makes money. So we rebuilt the framework on an existing model that is better than the equity model. Just the incentive system was wrong. And that is what the DYCO is.
Yeah, I love that. I really do. I think maybe you saw my my video on Orion Protocol. And for anybody watching this video, make sure you check out the Orion Protocol video. Because that was actually like my first introduction to the DYCO model. I don't know how it took me this long to find it, but I loved it because I'd gone through so many different ideas, for incubation, like token sales, like different ideas, just all across the board. But the DYCO model really just struck me because it was like, well, what it does is it gives the incentive to whatever company is offering this token offering through the DYCO model to make sure that you do what you say you're going to do. And at the very least, the investor can get, at least some of their money back, right? That's huge. And then, like you said, ICOs, most of them have been successful, regardless of scams or not. Successful, obviously.
Well, a few of them been hyper successful.
Yes.
Most of them been scams.
Yeah. Yeah, exactly. So obviously, like the tables are kind of turning in terms of like crowdfunding. And it just seems like, in the very early days, VCs hated ICOs and all this stuff. They hated the models because it would ruin their business model. But now it seems like things are really starting to shape up, especially with a model like the DYCO model that you guys have now implemented. So it's a great idea to me. Again, if you guys haven't seen the Orion Protocol video, go check it out. I'll have it in a card above this video. So we discussed this, but now what is like social mining at the core?
So social mining, there's 3 pillars in order for us to build what we call a decentralized VC. We want to build a global decentralized VC community. And the first pillar is obviously funding. And if everybody gets raked, then you can't get the funding. But what a VC provides, not just money, it provides also network and it provides value add. So what social mining is essentially it's a software which lets you figure out who are your token holders, your investors. And people like on LinkedIn can showcase their skill sets. And they can either be given tasks, which is a centralized version, or they can create their own teams by requesting a funding from the company and build their own micro foundations, or they can go full on decentralized and say, I have done this. And then people see it on the board. I have done some kind of video. Like you're an influencer, you like Orion. Okay, you made an Orion video. That's valuable, right? And how valuable is it? Well, it depends on how valuable people think you are. Because you could easily fake the YouTube views, it's very simple. And you could be extremely influential or you could be nobody. So nobody's better at evaluating this than real humans because it's very hard to build an algorithm to do this. So you put your video there on social mining for Orion. Now it's on the top. And everybody who holds tokens in their own wallets or even provides liquidity, we recently introduced we have chain analysis. So unlike most other companies which require you to deposit money into chains, into smart contracts, we just ether scan, so there's more security for you. So essentially, other people now hold Orion, connect their wallet to the system, and are giving voting power. Now their incentive is to make sure that people like you are being upvoted and paid more. Because if you get more Orion tokens, and you get a positive experience from social mining, then you might talk more about Orion. And that's good for them because, well, it's going to pump their bag. So everybody has a limited amount of voting power every week, and people have to decentralize autonomously, think who provided the most value for me. Personally, people, if I like videos, I'll choose this. If I like content, I choose that. But decentralized autonomously, that's the name DAO, right? Decentralized autonomously, people come together and vote what is good and create value, while others come and validate the value. And that's what social mining is. And it's a software which we started off, and it is the value proposition from the decentralized VC. For example, we just started with OPT, Open Predict, and I'm actually very happy now because the first few tasks were from the people who were like biz dev team. People make a biz dev team. Within 4 days, the community has added us to 1inch, has added us to Blockfolio, to Delta, to Moonshot. And there's so many of these.
Yeah.
Moonswap.
Yeah.
We did the Uniswap pool ourselves, of course. That was a big one. But a lot of small things, because everything is now permissionless, which is beautiful in combination with community work. Because people can just like help you without actually asking you or ask anybody else. Yeah. So people are like, wow, we are in CoinGecko, we are in CoinMarketCap, and all these things. Because we don't have a team of one biz developer. Everybody who holds the OPT token, which is doing quite well, has an incentive to help OPT because they don't want to sell because of the strong holder sale. So instead of just selling, they say, I hold these tokens, so I might as well do my best to make it go up. And that's what the decentralized VC is supposed to do, and that's what the software does.
Yeah, that's awesome. I really do love the factor of allowing the community to actually participate and help grow the company and the project. I mean, I just think that's probably one of the coolest things about this whole decentralized nature. But that's awesome. So you've gotten Uniswap, like CoinGecko, CoinMarketCap, and all these things. It just takes a little bit of time, but
yes,
it's manpower, right? It's effort. It's a lot of time is money. So if you can get the community to do it for you, and it's in their incentive to do that, that's genius. It's just I love it.
And I made a joke on the chat because people said, "Oh, I did this," and we had a really cool video from the community. I'm gonna send it over to you. It's like really high quality. And I said, this is probably more help than most these VCs promise or give to coins. A lot of VC funding in crypto is very shady. So I said 1 week of this community probably provided more help than most VCs.
Yeah, I totally agree. I mean, there's just really not a whole lot of incentive to go through older routes of raising money and crowdfunding. I just think that there's so many incentives nowadays to participate in the token sales like what you guys are doing. It just makes most sense for the investor themselves. And it seems like you get more safety too.
Yeah. Also, individual people are happier if not a single person holds 10, 15% of supply.
Exactly. Next question. Well, I guess, we kind of just covered this, but one of the major issues of some of the best products in crypto is that they have an amazing tech, but they lack in the marketing department. And this is something that I personally seen myself with some of the work with some of these projects. They have great tech, and you're actually, I think you said earlier, sometimes it's the other way around, but yeah, sometimes they have great tech, but they just don't really know how to market the product. So could social mining, essentially help with this major issue?
100%. It depends. Obviously, I've seen a lot of projects going from, Orion is a good example. When we started off with Orion, we looked into it, and it's been around for a while. It's been around for 1.5 years. So we actually talked to Orion because we wanted to see if their solution can help social mining buy tokens directly. So we actually wanted to use them. And then we talked, and we said, well, it's pretty cool. We did our due diligence and said, well, that's legit. It actually is going to work from the theory based. And they couldn't raise as much. They raised a little bit, but they couldn't raise much. And everybody who knows about Orion was like, oh, that's a good idea. It's just obviously a good idea. But brilliant tech team, right? Alexi's a brilliant engineer.
That's the first thing I noticed.
All right. Yeah. But they did not do a very good job at showcasing themselves. And that's a good example. We love these projects because we really focus on finding those undervalued gems and try to market them up. But there's also projects which have a amazed, like really intense tech, like really too much tech. And if there's just too much tech and not enough, I don't know, biz development, then that's also not good. So even if you just focus on tech, then all the market in the world won't help you.
Yeah, I totally agree. And then it's like you said earlier, you know, sometimes it's the other way around. Sometimes your marketing is really good and your tech is
and
just
there's nothing behind it. It's just fugazi.
Yeah. And I'm sure you have a couple in mind that are in your head, but we won't talk about those today. But I know I have a couple in mind. All right, so next question. So we'll talk about, you know, Uniswap a little bit. Uniswap, Mooniswap, all these different decentralized protocols are kind of popping right now. And I have some theories about where this is going to go next. But what do you think about the new craze that's, you know, kind of surrounding all these decentralized swapping protocols where anyone can add their token and pump it without any recourse?
Yeah, so it's a bit like the 17, 18 craze for ICOs, minus the fundraising. So most of the scams of Uniswap, what they do is they keep all the supply, they pump it up, and then they slowly sell it off. They're smart. If they're stupid, they sell it off all at once. Generally speaking, they can only sell like small bits because the liquidity depth is extremely small. So you can steal millions of dollars at once. Mm-hmm. Although at the moment it gets really crazy. Right? I saw this one scamster coin, which is like, this is a scam, really funny website, and we're gonna raise money and we're gonna sell out, and you guys are gonna fucking hate us, but we're gonna pump. It's like the website, I love it.
Yeah.
So it's getting really crazy. But generally speaking, the reason these scams work is because people don't care. Now, most people when I started in 16, 17, people that didn't actually make scams. The scams came later. So there was a bit of a history lesson. So early ICOs were really about people who wanted to build Ethereum, build Bitcoin, and a bunch of people who made a fuck ton of money in Bitcoin and ETH. And they thought, well, that's good for me. It's like the social mining idea. If I put a bit of money here, it's going to be good for the rest of my bag. Well, that wrapped up. Then the 100Xs came, the Balinas came, the Supermans came, and we had 18. 18 was really bad, right?
Yeah.
It was just scams. It was just $17 million raises and really horrible, where everybody who was somebody, I had a call once, like every single developer was like, all I want to do is do an ICO. Because why not? Right? You make millions of dollars. So at that point it was good, really bad. So obviously everything crashed. Then second half of 18 was dead. 19, first half of 19 was dead. Then the ICOs came a little bit and then died out again. But the difference was that people in 19 and in 18, people actually believed the people. The people who invest in IEOs, they knew it's a scam, right? They knew exactly that this is all bullshit because they've been there, done it. But it doesn't matter. If I give $1,000, I get $5,000 back, even though the other guy makes $1 million. But they don't care because they can probably think I can make my own scam, but that's a lot of effort. So I rather just be like feeling good about myself and put $1,000 in and enable these other scammers and get $5,000 back. So that's what's happening right now in Uniswap. People know that all of this is bullshit. So that's why the websites which really say this is a scam and we're gonna pump because do better, because no one believes anything anyway. And the good thing about these Uniswap pools is that at least now there's not a single person which makes millions. So the Ponzi itself distributes more winners overall.
Right.
So there's a slight incremental increase from what it used to be.
Yeah, actually, you know what? That's a good point. Because now what happens is, like you said, the liquidity pools are not that deep. So what would happen is if you try to if you try to pull all your money out at the same time back into Ethereum, for example, problem is the whole thing's going to crash. And like, as you are pulling out, it's, your price is going to crash with it. So that's obviously not feasible. So now what I think most scammers are doing is they're putting about 8 to 13 ETH into these random tokens. And then what they'll do is, of course, they'll pump the price, get other people to get in. And then about, 20 ETH in, they'll just pull the rug, or they will, slowly start to take it out and kind of keep the Ponzi running for as long as possible. But yeah, you're right. Before with the IEOs,
more like the masternodes.
Yeah,
right?
yeah.
The Uniswap pools are like the masternodes, which were
right
in 18 very short-lived.
Yeah.
And it was like 4 months.
And then the IEOs.
The same here.
I agree. And then the IEOs, you know, in 2018 or sorry, 2019, you're right. With the fact with the IEOs is like the exchanges supported these scams
because it was in their interest, right?
Exactly.
The IEOs were obviously doomed because the whole narrative was we are these big centralized entities we have a interest in choosing good projects, right? So we will protect you.
Yeah,
which was obviously bullshit.
Yeah,
because what is their interest? Their interest is basically to create IEOs, like create new companies, and just sell it to people.
Right, and it's not like there's really any legal backlash that's gonna really occur. It's because
there's no accountability.
Yeah,
right? That's the whole problem.
I mean, if you look at Binance, for example, I mean, they were all part of that IEO craze, and you can look at some of those IEOs and where they are now, and that tells you everything.
Generally speaking, most of them are okay. They did like what? They did BitTorrent, which was super legit, and then they kind of did 3 scams, and then they were smart. They're like, okay, that's a legit
let's stop. Yeah. So, yeah, it does seem actually from a new perspective, it does seem like Uniswap and Mooniswap and all these things are actually kind of culling the scamming to a degree, and allowing real companies and projects to thrive. And obviously now with a new token model like the DYCO model, that just makes things even better. And I assume what I think is going to happen personally is I think a lot of these new projects are going to realize, hey, most of these investors are looking for companies that support the DYCO model. And if we don't have it, then we're not going to be able to raise money. I hope that's going to
happen, right?
Yeah.
So we hope, obviously the DYCO model is not relevant at the moment. But I've been here, done that. This is going to go away sooner than everybody hopes. I hope that people will adopt the DYCO.
Yeah, I do think that it's going to happen like that because I think this is just like a little craze, the whole Uniswap thing. It's cool.
I love it.
Yeah,
it's for legit companies, and we helped Orion setting up their Uniswap pool. We helped OPT setting up the Uniswap pool, and I love it. Right, it's amazing because even with OPT we have 300,000. There's a few things I really love about Uniswap. No wash trading and 100% legit volume because you have to pay like $30 for a fucking trade.
Oh yeah,
ridiculous.
Yeah.
So there's absolutely no incentive to like pump up your volume to fool some other people.
Yeah.
So you can always know. Now we have an OPT. We said we're not going to pay any exchanges. We're going to try to do this really decentralized in this manner. And we got listed on Poloniex. We did not know about it. Right? They really just did that without, which is great. I mean, shout out to Poloniex. We're now working together with them. But originally the idea was, well, let's see how we can go with just a decentralized pool, setting up ourselves. And it worked well. Now we have about $300,000 daily volume, which is amazing. Only on the pool.
Wow.
We are moving now, also doing some trading competitions soon with OPT and Poloniex. So to move some liquidity also to centralized exchanges, so there's amazing benefits to it. Usually this stuff would cost about $150,000 in a bull market, and all predict they raise very little money. So that would be like 2/3 of the whole money that those guys have. That essentially was nothing. We didn't have to pay anything for it. So the beautiful thing about this is these Uniswap really disrupted decentralized exchanges, and I assume that Binance DEX swaps will come soon, which is cheap, fast, and has a user base, and it's going to be even better. Just that you have to pay the Binance listing fee because it is not permissionless, but it is open and decentralized.
So I guess that brings up an interesting question. It's like, where do these centralized exchanges fit in? I guess the big thing is, well, the fees are obviously not nearly as bad as like Uniswap and Mooniswap. So I guess that's one thing. And I guess that's probably really the biggest thing about centralized exchanges right now. But it seems like as the fees come down, and I think they will, because you're going to have little things like the Chai Gas token for 1inch exchange, for example, which is supposed to help with fees, and some things like that. I think these fees are going to come down. But when that happens, what's the incentive, or what's the advantage of using a centralized exchange at that point when you can?
I think they're going to, they have to clearly think what to do, or just make as much money as possible as long as they have.
And then
outdated market making on Uniswap and Kyber. is amazing. It is really amazing. And with V2 of Banker, I actually have a friend who's working on the whole math of that protocol. I don't think they have much chance, because I wanted to change so I had a problem with Binance. My money was stuck there because my old email, I don't trade much. Like I'm not a trader at all. I buy, I hold, and then eventually I sell.
Right.
So I haven't used my Binance account for a year, and I used to have my old ICO ego on that exchange. I had to tell them, hey, my money is stuck here, because I still had the phone, I still had the phone, the 2FA, the password, but you also need the email, which is ridiculous, right? So I told them, we sold that domain and someone else bought it. So I cannot get access to that email again. It took me about 1 month, and I have a few friends who had to constantly write them for me to get my money out. And it was a pain in the ass, and I just don't want that experience again if I can just put my private key and that's it.
Yeah.
Because all the security that we are burdened with is simply because of the idea that all the money is in one place. If you have the decentralized nature of the DLT technology, you don't need a 2FA, a phone, an email, and a password, and a second password.
Yep. Yeah, that's 100%. I agree with that. And that's weird. I think that's going to have to go away. I feel like that, because that is kind of ridiculous. Now, I obviously do feel like there will still be some people who are just, not interested in maybe learning how to do simple wallet, usability, and that will probably come with like some really new retail traders. But at the same time, I feel like most people who really want to be in crypto and they're really concerned about OPSEC, they're going to, default to the other option, the decentralized option, and really kind of move away from centralized exchanges.
That's because people are currently used to logging in and one-click logins with Facebook, etc.
Right.
But I've seen some really cool, interesting projects, which I definitely want to get involved with once I have more time. And we'll also incubate some of these projects where the benefit of building a whole new web application on blockchain is when you sign up your login as a signature, digital signature, you get used to using the private key. And the beautiful thing is about that is you can have a network, and it gets a bit techy, but essentially in simple terms is you can have a Facebook on many different domains, right? So you could have Thai.com, and that will be plugged into the same user base as DAOMaker.com. We'll be on the same social network because everything is opened, decentralized on the blockchain, and we would just sign up. The whole user base would all be together, but it'd be on different domains. And that's where I think we're going to, and people will get more used to signing on with their private keys to blockchains, which is a bit like emails. Now, if you have an email, you can have an email to any other server. You can connect your email to Zoho is our service, or G Suite or whatever, but it is simply similar to how that works. Your email is not on one centralized server of Facebook or Twitter, right? It is opened on everywhere, and people will probably get more used to signing up with their private keys, and at that point, people will feel less or more comfortable keeping custody of their own assets.
Yeah, I totally agree. I've seen so many different options that are coming up for authorization that doesn't really involve, the whole email thing. And I think email is great, but as far as login purposes, I feel like it's going to go away. I feel like there's much better methods, and we're going to see a lot of those, especially within the next 2 years, I think. Next question is, do you think the DeFi narrative will die out in the next couple months or maybe a year? Or do you think that that's going to kind of be the next narrative, kind of like the ICO craze? That's
a tough question. There's two sides to the story. When you look at the pure market caps of DeFi and compared to 17, it's nothing, right? This bull market, people look at the 70x and 50x's that we're been handing out like candy, but it's really nothing compared to 17. Projects are raising $1 million and have 80% of that money locked up. Okay, so that's $200,000 market cap, right? Market cap, and you make 50x. All right, whatever. Icon raised $35 million, had 100% unlocked, and then 140x. And there were a lot of these, right? The amount of volume that we put into these ICOs at the moment seems similar in terms of returns, but that's because our expectations are much lower.
That's probably what it is.
Right? So people were not there's this cool trend going on at the moment. I love it. That people are like super low cap, super undervalued. OpenPredict was like a hardcore example of this, but a lot of these companies that could raise 3-4 million, they raise $1 million. Why? Because they want the FOMO, they want the hype. So in that argument would go for that we still have a long way to go for the DeFi hype. The argument against it is basically, well, it's a pretty obvious Ponzi, most of these. Right, so the argument against it is like, why haven't we yet seen more interest? Why is it so little? So option one is people just got way too burned in 17. And people say we didn't see any adoption. It's not true. When I was in 17, everybody in my work was talking about crypto. Like everybody had a fucking Coinbase account. Like people walking the streets, Coinbase account. We had a lot of adoption.
Yeah.
So the second reason why we see a volume-based, much lower bull market is because maybe people just got too burned and said, fuck this. Which would be a very bearish sign for the whole industry, which is also plausible. Generally speaking, I don't know. People are very greedy, and I would probably say that they're going to come again and get burned again because people are stupid and they forget. Yeah. But as of right now, most people in the space who are pushing up the prices are hardcore people of 2017. I don't see much new user base or like some really retail-oriented people like coming yet.
Yeah, I agree with that. I don't think we're going to see new retail and new retail traders and new volume really until after 20,000 for Bitcoin. So in between here and now, it's just kind of like recycle pump and dumps.
Yes, that's exactly what it is.
Yeah, so it's cool. I like what's happening with the innovation that's coming out of all this. But I do think that the gains on some of these things are definitely going to be short-lived. And I have seen a few of my friends get into some really sketchy projects, kind of knowing that they're pump and dumps.
Yeah, it's like obviously they know.
Yeah,
of course they know. But why would they not? Why would you care?
Yeah, exactly.
Like you know, it's like a better chance that you make money than a casino. Yeah. It is equal amount of rush. So fuck yes, let's do it.
Yeah, that's a good point. It's a great point. And you can sit at your computer and do it while you're on lockdown from COVID. So
yeah,
easy. I guess the next thing, I mean, we're pretty much actually at time now. I'll just let you wrap up and just highlight anything that you guys are working on right now or anything that you want to highlight in general. And we'll just wrap it up.
Sure. So we innovated this like low risk investment for retail. We have like the shows, which is usually 100% risk. Then the DYCOs, which have 35% risk to 80% risk, 35% risk for project with revenue. Like for example, Ryan was still in demo, but if a project is like bigger, we give them more room to space. And soon we're going to introduce our new product line, which is going to be 0% risk, which is going to be very interesting. And it's not, people think, oh, it's going to be a DYCO where you get 100% refund. No, that's not it. For anybody who would be interested in learning more, we're going to have a lot of news coming out soon for the company, probably in like 2-3 weeks. So they can follow us on our socials. It's on Twitter, it's the DAO Maker. On Telegram, it's just DAO Maker. And if they have any questions, they can come to our chat. We're very open and they will talk. Usually any one of the team members will respond very fast.
Awesome. So I'll put all the social links on the video itself so everybody can see that on the bottom and the top. And yeah, man, this has been awesome. These are some really good little conversations about the macro environment for DeFi right now. And we'll have to see how things shape up. But I think you and I are right. So thanks for coming on, Chris. We'll have to have you on again, and we'll see what else you guys come up with.
Thanks. It was good talking to you.
Thanks, man.
Bye-bye.